place this time. Don't know why it keeps on crashing. Yo everyone, welcome. This is FFX. Welcome to the next or new video regarding the mentorship. And this topic we're basically gonna be talking about sessions and kill zones in which we use for day trading. I'm gonna try simplifying this as simple as possible. So hopefully this video should be short. Yeah, it should be very, very short. Yeah, just checking. Okay. What are sessions or kill zones? In day trading, we basically have three sessions. There's the Asian session, London session, and New York session, right? But in smart money, or personally, I tend to trade only the London session and New York session sometimes, but the most volatility tends to happen on the London session and the New York session. And within these two sessions, there are time zones in which price is more likely to be volatile, and we call this kill zones. For example, the London kill zone and the New York kill zone, right? And for you to know this kill zone, as ICT states, you need to convert your time. It potentially would be in default UTC time zone, right? So you just convert your time to the New York time zone, because in smart money we basically trade based on the New York time zone. That's how price is delivered basically. So let me just sketch out the time zones for you with current price. Okay, everything is sketched out right now. So basically these are basically the most fundamental zones it's basically important for you to know these zones in order for you to know when to trade, because we trade based on time and price, you know. So first we've got the London, we've got the Asian, it's Asian range or Asian kill zone, whatever you like to call it, but personally I'll call it the Asian range. Then the Asian range begins from 8 p.m. to midnight from the previous day. So in other words, this range right here begins right here at 8 p.m. as you can see right down there, 8 p.m. to midnight. That's how we sketch out the Asian range. And then the London kill zone mainly begins at 1 a.m. but the best trading hours is between 2 a.m. to 5 a.m. New York time. And then London lunch is from 5 a.m. New York time to 8 a.m. New York time. And then the New York kill zone, mistakes. New York kill zone. The New York kill zone is between 8 a.m. to 11 a.m. But you can stretch it out. You can stretch it out to 12 a.m. It's optional, but I'd mainly recommend you to stick to the 8 to 11 a.m. So basically, the London kill zone, this range right here, and this range right here, the London kill zone and the New York kill zone are basically the best trading hours for day trading. In other words, the most volatile hours to trade are between these time zones or within these time zones. In other words, you get the most movement or market pressure within these time zones. Some would say it's when the banks tend to be trading, so that's when most volatility is in. Don't know how many times I said that. And then at 4 p.m. that's the true day range. In other words, from midnight, this range right here, from midnight to 4 p.m. that's the true day range. The true day range. In other words, that's the only hours we actually looking to trade in. Outside that, it's not how to explain this? It's not recommended basically, because that's when nobody's trading. Retail could be, but banks and everything else are most likely not trading within these hours. That's why price tends to be choppy after 4 p.m. going to midnight. So basically, we mark out those zones for potential ranges for the next day, and these ranges are called accumulations. In other words, if I was to sketch this out from the previous day, let me just sketch it out here. I don't want to rewrite. Okay. 4 p.m. Where's 4 p.m.? Potentially this whole range from here, from 4 p.m. to midnight, this range is regarded as the manipulation range. In other words, that's when price is most likely to be ranging. And there's basically three phases with market movement. We have manipulation. No, we've got accumulation. I'm mixing it up. This is the most time in which price will tend to range. In other words, within this time, price is accumulating orders. In other words, it's collecting volatility, if I said it right. We've got three phases. There's accumulation, manipulation, and distribution. I don't know what's going on with my mind today. Basically, it's accumulation, manipulation, and distribution. In other words, based on these sessions right here, let me just... Okay, let's go. Blank page. We've got the 2-day range right here, right? So basically, price does three things. It accumulates, manipulates, and then distributes. So the Asian range is more often regarded as the accumulation phase. In other words, that's when price tends to range the most. Hence why we call it the Asian range instead of the Asian kill zone. So price would potentially range like this till potentially midnight New York time. So after that, from midnight to 2 a.m. before the London session kill zone begins, that is the manipulation phase. In other words, when we say price manipulates, it basically ranges, right? And then it goes the opposite direction of the true higher time frame bias or trend. In other words, it would range, go bullish, stop out anybody who's going bullish, and then drop down to go its true direction, which might be bearish. So it's basically something like this. And then price would drop down, continue down. New York launches more often, I would say, a second phase of accumulation. It's when price also tends to range or form some form of retests just for an additional distribution for New York time, if that makes sense. I don't know. Yeah, so based on this sketch right here, I'm gonna add a few more labels for it to be a bit more clear, because this may be a bit more confusing. So here we go. Hopefully this should be more clear. Asian range, price accumulates orders. In other words, it ranges. And then manipulation phases from midnight New York time to 2 a.m., which means price violates highs and PDRAs. PDRAs are like fair value gaps, order blocks, or anything like that. So basically, price violates potential highs or buy side liquidity, and then it stops out anybody who's bullish, basically. And then from London kill zone to New York kill zone, we regard that as the distribution phase. And in between them, there's often a potential manipulation phase, or rather, basically a manipulation phase. It's the same as an accumulate. It manipulates and accumulates at the same time because it's pushing bullish while ranging bullish, if that makes sense. So basically, this whole range right here would be regarded as the distribution phase because it's going it's going via the true day range, if that makes sense. So hopefully guys, this was helpful, and if you liked the video, be sure to subscribe. And if I wasn't clear on something that you'd like to just write it down in the comments or hit me up on Twitter or wherever, and I'll be glad to help you. Everybody, enjoy the rest of your day, and then see you in the next video.